But we begin this hour with a worse than expected U.S. jobs report. The country adding 22,000 jobs in August. That is significantly lower than the 75,000 some analysts had predicted. Unemployment is at a 4.3%. That is the highest rate since 2021. As far as revisions go, the Bureau of Labor Stats now saying the U.S. added 79,000 jobs in July. That is up from 73,000 in the original report. But in June, the economy lost jobs. CBS News MoneyWatch correspondent Kelly O'Grady comes to us live this morning from the New York Stock Exchange for more on all of this. So, Kelly, first off, are you surprised about these numbers? And how are the markets reacting to all of this right now?
Not really surprised, Chanel. I mean, look, what we have seen is a continuation of what we've seen the past few months, and that is a significant slowdown in terms of the labor market in the U.S. economy. And it backs up what we have heard from businesses. It's not that we are seeing mass firings, but we are seeing businesses pause. They're not mass hiring either because of all of the uncertainty, whether it be tariffs, whether it be AI, whether it be consumer sentiment. When you dig into these numbers, that 22,000, sorry about that. If you heard that noise, that was just something falling. We're going to soldier on. That 22,000 is not crazy, you know, when you think about the fact that you have those revisions that we saw back in May and June to the tune of 258,000 less jobs than originally reported. But what this does tell you is there are certain sectors that are losing jobs. Manufacturing, there are certain sectors that are adding jobs. Healthcare in this report. So it's all sort of balancing out to 22,000. The thing that I will note, though, is August, historically, this tends to be a really messy month, and we wouldn't be surprised if we actually saw these numbers revised up. If you just look at the past few years, that has steadily happened. And I will also note this number, it is an August number. It is only September 5th. So these revisions are common as more data comes in, Chanel.
Okay, the timing here is so important, Kelly. This, we should note, is the first jobs report since President Trump alleged the last job numbers were inaccurate. And of course, we know that led to the firing of the former commissioner. So I do need to ask, you know, did all this sort of undercut the political legitimacy of the economic data?
Don't think so. I mean, certainly there are concerns that the president has expressed, but I will note that a lot of economists had expressed those same frustrations about the data. We have seen revisions for years and years, and it goes back to how the data is collected. I just mentioned the timing, right? If someone got hired or fired maybe on August 31st, that might not show up in a report that comes out September 5th. That's one thing. Also, in terms of how the data is collected, it's based on phone calls, some digital databases, but even before the president expressed concern about those revisions in the last report, there were a lot of economists saying, you know, when that first number comes out, it can be revised up, it can be revised down. Based on how the markets are reacting today, don't think that they are seeing this report and saying, hey, this is not trustworthy data. In fact, they're seeing this report and saying, well, this gives the Fed the green light to cut rates when they meet in just under 2 weeks.
Okay, some good context there. Kelly O'Grady, thank you. Also want to bring in CBS News White House reporter Willie James Inman for more on this story. Willie, how is the White House reacting to these new numbers this morning?
Hey there, Chanel. Good to be with you on this Friday. Well, the White House is downplaying these numbers. In fact, Kevin Hassett spoke moments ago talking about how these numbers not only show the jobs numbers that we've seen in the past month, but that the White House essentially expects them to be revised upwards. Listen to what he said earlier.
Seeing a massive blowout in capital spending and new factory construction, something that happened because of the tax reforms that we had. So people are allowed to expense factories. Capital spending is growing at a rate. It was about 8% over the first half of the year. It's accelerating in the third quarter, which is why GDP now has the third quarter at about 3%. And so, like, all the indicators that we're seeing are that inflation is low and economic growth is solid. Income growth is solid as well. So that the only part of the data that's disappointing is that the jobs numbers have been a little bit lower over the last 3 or 4 months. But again, Goldman Sachs had a report out yesterday that said that the seasonals of the summer are kind of unusual, and that in August, typically the advanced number is about 60 to 70,000 lower than the final number ends up being.
So we can perhaps expect, as Kelly perfectly pointed out, that those numbers may increase as more data comes in and the weeks move forward. But remember, the president has oftentimes not only blasted these numbers, but blasted the Fed for not lowering interest rates. So we'll keep a watchful eye on what Jerome Powell and the rest of the Federal Reserve Board of Governors do in terms of that benchmark interest rate when they meet in the coming days this month. Chanel.